What is going on, people? It's Matt from Liquid Loans, and in this one we're going to find out what the hell scam wicks are and how to avoid them. So with no further ado, let's go. Another scam variation, you say, involving cryptocurrencies? No way, get out of here. As we all know, navigating the cryptocurrency space can be like a minefield for new investors. And another lovely way to lose your digital assets, I use the word lovely very loosely of course, to add to the long list there already is a nice fat juicy scam wick. A crypto scam wick is when a centralized entity or an individual trades a cryptocurrency at a price significantly outside of its normal trading range with the intent of triggering liquidations or stop loss orders. As a result, a cascade of buys or sells will occur, further pushing the price in the direction that the scammer intended. Although scam wicks do not have a clear definition, they tend to have similar characteristics. Number one being a violent price move to the upside or downside and outside of the normal price trading range. Number two, after the violent price move, it then returns to the normal range in a short period of time. And three, the price move is usually only seen across one exchange, suggesting a local price feed issue and centralized bad acting. So in order to better grasp this important crypto concept and protect yourself from devastation, we must understand candlestick charts, stop losses, and leverage trading. A candlestick chart is a type of financial chart that represents the price action of a particular stock, commodity, or currency. They contain 4 different data points. Number 1, the high, which is the highest price paid in that time interval. Number 2, the open, the price it opened at on that interval. Number 3, the close, the price of close on that interval. And number 4, the low, being the lowest price paid during that time interval. The real body represents the space between the open and the close. If the close is higher than the open, it's a bullish candle, which is green. If it's lower than the open, the candle is bearish and it's red. The upper shadow of the chart represents the space between the open close and the high, and the lower shadow represents the space between the open close and the low price. The shadows can also be referred to as wicks, and hence where the phrase scam wicks come from, because it wicks in either direction momentarily, caused by the scamming party or individual. A stop loss is a limit order placed on a centralized exchange which executes a buy or sell of a cryptocurrency once it reaches a certain price. Scammers will attempt to take advantage of this by buying up the price or selling it down to a certain point to trigger the stop losses. As a result, the price will move in the direction that the scammer intended. For example, let's say the price of PLS is at 5 cents and many investors are shorting it, meaning they're betting the price of PLS will go down. A whale or an exchange can seal this information on chain and they try to raise the price of PLS to 7 cents to hit all those stop losses. If the price hits 7 cents, it will trigger all of the liquidations in that range and cause the price of PLS to go even higher, therefore wrecking all the investors who are banking on it going in the opposite direction. Leverage trading is when an investor borrows money from a lender in order to potentially earn more money than they could have alone. The problem with this strategy is that if you win, you owe them a percentage of the gains, and if you lose extra and it's all on you. For example, let's say you have $1,000 and you take 5x leverage. You now have 5,000 smackaroonies or 5,000 bucks to invest. However, now the price only needs to drop by 20% for you to lose 100% of your investment. If the price of the crypto you were leverage trading wicks down briefly to 20%, even for a few seconds, you're out of the game and will lose everything. Trading with leverage is about as stressful as it gets, so if you want to age yourself overnight, this should be your sport of choice. Firstly, do not use centralized exchanges. Now, there are a myriad of reasons to not use them, but the main one is to always hold the keys to your own crypto. Scam wicks have highlighted an additional reason, which is to avoid exposure to their centralized price feed data. Centralized exchanges likely pull price feeds from limited sources or more likely, it's them who control the prices themselves, therefore putting your option trades and stop losses at risk. Second, do not leverage trade. Now this one should be a no-brainer by now because smart men go broke in 3 ways: ladies, liquor, and that good old leverage. Avoid taking leverage, especially in markets as volatile as crypto can be, because scam wicks are just one way you can get wrecked in that minefield of a space. And third, use DeFi protocols with multiple price feeds from decentralized oracles. One potential problem arising from scam wicks would be smart contracts that are reliant on accurate price feed data. For example, if the price of PLS wicks down abruptly within the liquid loans protocol, many vaults could be liquidated and it would cause serious problems to the functionality of the protocol. To solve this, liquid loans will use multiple price feeds from the decentralized Oracle protocol, Teller. So to sum it up, a crypto scam wick is when a centralized entity or an individual trades a cryptocurrency at a price significantly outside of its normal trading range with the intent of triggering liquidations or stop loss orders. As a result, a cascade of buys or sells will occur, further pushing the price in the direction that the scammer intended. To protect yourself from scam wicks, avoid centralized exchanges, don't leverage trade, and use DeFi protocols with multiple price feeds from decentralized oracles such as liquid loans. So I hope you enjoyed that one on scam wicks and learnt a thing or two on how to protect yourself. If you like content like this, do hit that subscribe button and that bell icon so you're notified every time we drop new videos on the channel. You can also tap the like button, share the video with someone who you think it may benefit, and if you're feeling very kind, consider dropping a cheeky comment below for the algo. It does help us out. Thanks for watching, and I will see you on the next one.